and I'm the Education Programs. Good afternoon. My name is Linda Griffian. I am the Education Programs Coordinator with BusinessLink, and thanks for joining the webinar today. At BusinessLink, we are honored to provide services to all entrepreneurs and specialty services to our immigrant and Indigenous entrepreneurs. We are inclusive in our cultural understanding and awareness of the histories of our country. With that, we'll start this event with a land acknowledgement to recognize all of Alberta. BusinessLink acknowledges and respects that we are on traditional land, meeting grounds, territories, gathering places, and traveling routes of Treaty 4, 6, 7, 8, and 10, and the home to many First Nations, Métis, and Inuit people. In the spirit of reconciliation, we acknowledge the lands of those who've come before us, reside here now and in the future. And I'm so happy everyone's here today, and thank you for joining. Today we are privileged to have Sid Bhattacharya with us today. He is the Chief Economist for the Alberta Treasury Branch, and he'll be presenting Alberta's economic outlook. So I'm very thrilled to have him back because we had him last year. And one of the things that is so tricky for entrepreneurs is to navigate what the heck is coming next, especially when we've had a few years of just turmoil and pandemics and unrest around the world, upcoming elections. It can be just a topsy-turvy world right now. So it's always helpful to get some insight from people who are monitoring this stuff on a daily basis. So thank you, Sid, so much for joining us and presenting to BusinessLink and our clients today. Folks, if you have questions, you can pop those into Q&A, and we're going to save those, I believe, till the end. Is that correct, Sid? Will we save the questions till the end? Or?
Yep, that'll work.
Perfect. So everyone, if you go down to the bottom of your screen, you'll see Q&A at the bottom of your screen, and you're welcome to pop questions into there, and we'll tackle those at the end of the presentation. And I think that wraps up housekeeping, and feel free to begin. Thank you for joining us.
Thank you again, Linda. Thank you for having me and doing this again. It's really an honor to do so. We'll, of course, talk about a lot of things going on in the economy. We start with a couple of the big picture items on the global landscape, see kind of how we ended up here, what's happening, what's moving the needle on the global economy, then slowly go into conditions in Canada, finishing off with the latest economic conditions in Alberta and our latest ATB economic forecast for the province. So when we look at trying to get a global perspective, we can see, or rather we know about how it's been, as Linda mentioned, it's been topsy-turvy to say the least. We had, of course, the Russia-Ukraine war that started in 2022. It's still ongoing and can escalate at any point. To top that off, we now have the Israel-Hamas conflict. We have re-election for Trump fears kind of in down south. We also have China's growth prospects dwindling of late. Now, why do I mention these couple of economic events? The reason these things are important is because these are all risks that can push the supply chains into tailspin again. Disruptions can cause commodity price spikes and stoke recession fears. We already had an elevated inflation point across world economies. Monetary policy is tightening, and which also impacts with a lag. As a result, we have slowing housing demand, rising levels of personal and corporate debt, I've cited as major points of concern. Having said that, global growth is expected to slow to 2.4% in 2024, as per the World Bank. It's the third consecutive year of deceleration, rising only to 2.7% in 2025. Now, the reason why it's kind of downgraded so heavily is because of the added risk, the conflict of the Middle East. On top of the already lingering effects of the COVID pandemic, you have the Russia's invasion, inflation, and tighter monetary policy measures, which is causing developed economies to rise only 1.2% in 2024 and under 2% again, 1.6% in 2025, despite a strong performance by the US economy, which is expected to lose a fair bit of momentum going into 2024 as consumer spending slows down and labor market is not staying as tight as it was in 2023. For developing economies, they are expected to rise 3.9% this year, close to 4% this year and in 2025, with China's growth to slow from the 5.2% increase in 2023 to about 4.5% in 2024 and 4.3% in 2025. Property markets are ailing. You have sluggish domestic demand, high levels of debt from the pandemic. That's kind of the key reasons why China's growth is not really picking up as much as some analysts have expected. Moving along in Canada, we have seen successive rate hikes from March 2022, pause now at 5% for the trend-setting policy rate for the Bank of Canada. It's the highest it has been in decades. The last time, for context, we have been this high was in 2001. It's also the most aggressive tightening cycle we've seen since the early 90s. So on the one hand, the bank has said that inflation has been stubborn, progress has been slow. On the other hand, the bank admits that the Canadian economy is now stumbling from past rate hikes and that the excess demand story contributing to inflation is withering away. We are expecting the policy rate to remain at 5% till the middle of this year, start cutting through summer, reach around 4% by the end of this year. And they're expected to ease towards 3 to 3.25% by the end of 2025. So a slow process, to say the least. As mentioned before, national economic activity has been slowing down as a result of tight monetary policy measures and high inflation. Quarterly GDP in Canada fell 1.1% in the third quarter of 2023. It was entirely driven by a 10% decline in business investment, while consumer spending held flat. Now, even though it's a fairly mild decline, if you factor in the surging population levels, per capita GDP has been falling and was down for the fifth straight quarter in Q3. We expect national GDP growth to only be at 1.2% in 2023 and easing more to 0.7% this year due to a weaker first half before picking up towards about 2% growth is what we expect in 2025. Now, as you can see, we're kind of closing in on conditions in Alberta. I can't do that without oil prices. Oil prices have been on the slide since 2022, as you can see, but they remain fairly high, but also volatile. So to do a quick recap in what happened since that time, since last year. In January, WTI oil price averaged $78 a barrel, which was driven largely by optimism around fuel demand in the US economy. However, in March, we had multiple bank failures, if you recall, and persistent inflation, which pushed oil prices down to $66 a barrel in March. However, we then had successive production cuts mentioned or announced by OPEC Plus members, which propelled prices around $80 a barrel by early April, and further cuts around in September by Saudi Arabia and Russia pushed prices towards $89 a barrel by September. Now, since then, prices have moderated towards the $70 to $72 per barrel right now. It's largely driven by growing concerns of the ability of OPEC Plus members to actually successfully implement their pledged 2.2 million barrels per day cut. We are expecting prices to stay strong at about $79 per barrel this year as the market rebalances amid OPEC Plus cuts and slower demand growth. It's similar to what the US EIA, the Energy Information Administration, expects for this year, and moderating more in 2025. Okay. Now, before I go into the details of the economic conditions in Alberta, I just want to point out that, of course, we've spoken about what's happening in the global scale. And when we go through, we'll, of course, cover housing, labor, we'll cover business activity, oil, everything that's kind of important across the Alberta economy. However, you'll see the three key factors that are setting us apart from the pack. And you'll see the impact of these three factors pretty much across the segments of the economy. One is the fact that our energy sector is bouncing back after a long time. Also, we have growth across many other sectors like tech and petrochemicals. That's providing a boost. Another big boost, or rather a big cushioning that's coming on, is due to the surging population levels that the province is seeing. And you'll see how these are impacting economic indicators in the province as we move along. We spoke about oil price. In terms of oil production in the province, we had a fairly challenging year with wildfires pushing production down to a 16-month low of 3.4 million barrels per day in May. But however, output recovered very swiftly after that. Currently, or rather, as per the latest estimates by the AER, they average 4.2 million barrels per day, which is a new high in November. As a result, year-to-date oil production is just under 3.8 million barrels per day, highest on record, and up about 1% from 2022. Looking ahead, we expect oil output to hold at current levels in the coming months. However, they are expected to get a big boost from the Trans Mountain pipeline expansion, project expected to be completed later this year, which will add roughly 590,000 barrels per day to our existing capacity. Spoken about oil, spoken about production, let's see what's happening with capital spending. National oil and gas capital spending was up by 20% year to date through the third quarter of 2023, which is the highest level of spending we've had nationally since 2017 and almost double of what it was back in 2020. In the province, oil and gas extraction industry got a boost of 41% in 2022 to surpass its pre-pandemic level set in 2019. It is slated to have another increase of 10% this year and 8% in 2025. However, despite those increases that we are expecting, investment remains below the highs that we've seen in 2014-15, where due to the fact that capital discipline is being maintained by shareholders. In 2014-15, oil and gas investment, just for context, used to average about $60 billion per year. We're nowhere near that ballpark. Labor shortages, inflation, policy uncertainty are some of the key reasons why we are not seeing a more of a pickup in oil and gas investment. However, on the non-energy side, investment is expected to rise about 9% this year and 10% in 2025. Now let's explore that non-energy a little bit. So if you see in the non-energy sectors, one of the things I'd like to mention on the chart on the left, the tech sector, especially in Calgary, has been growing rapidly and is on track for another year of record venture capital investment. PitchBook places Calgary 12th globally among the fastest growing venture capital ecosystem locations in the world. The CBRE marks the city as having the second highest tech job growth across North America. So that's just on the tech side. If you look on the right side, you'll see how chemical manufacturing in the province has been picking up since 2017. In that side, there's also a ton happening. You have the biggest announcement of Dow's Path to Zero Fort Saskatchewan project, which was greenlit by their board of directors this November. Excluding government incentives, the project costs about $11.5 billion with partner investments, of course. It'll be the first net zero ethylene derivatives facility in the world, and construction is expected to start this year with a completion date of phase 1 in 2027, and phase 2 is expected to complete in 2029. Just for context, a project of this size typically adds about 6,000 to 9,000 construction jobs during the construction period, and of course, about a 0.3 to 0.4 percentage point hit to GDP. After the project is finished, we of course have the project adding to Alberta's production and export capacity. So it is significant. So this Dow project is actually one of the key reasons we've upgraded our forecast slightly for GDP, which I'll get into later. Now let's look at the sales side. I think those were the intentions. If you look at business activity, exports out of the province were up by nearly 50% year over year in 2022, driven mostly by commodity prices. In terms of numbers, that's a $67 billion increase year over year. Since then, prices have been slowing and so are exports. In 2023, they are up 15% year to date through the first 11 months of, relative to the first 11 months of 2022. Now, that's entirely driven by lower, or rather tempering oil prices. For context, WTI averaged $95 per barrel in 2022. In 2023, they averaged $78. So that's your 19 to 20% decline right there. Similar story with gas prices. Production, as we saw, are trending at record levels. So it's just about a 1% increase in production year over year at the record high. So not huge increases there. As a result, overall export revenues are ticking down, but they're still higher than what they were a year, 2 years back. On the non-energy side, non-energy prices have also eased, but then export values are still trending closer to record highs from 2022 levels. Agricultural machinery exports are up 15% and 35% year to date, cushioning the decline as we've seen in some other sectors like chemicals and forestry. We expect total export volumes to be up about 2.3 to 2.4% for the energy products in 24 and 25, while non-energy product exports to grow at about 2.1% in 2024 closer to 4% in 2025. Let's talk about another key non-energy sector, the agriculture sector. Similar to the energy side, it also had a pretty challenging year. If you look at the dry conditions, especially in the southern and eastern parts of the province, that's expected to weigh on yields going into 2024. We had BC port strikes, we had labor shortages. Having said that, production still is expected, or rather still averaged closer to 10-year averages for barley, canola, wheat, all our major crops. And on the price side, crop prices have been moderating from the high that it reached due to Russia's invasion back in 2022. They're down about 11 to 20% for pretty much every canola, wheat, and barley. However, they're still higher than their 5-year averages for those respective commodities. We expect some weakness of the 2023 droughts to weigh on yields, as I mentioned, in 2024, but production across other parts of the province was fairly strong, so it might just not show up as much, but it is likely to not have that strong a year in terms of export contribution as was 2023. Now, moving slowly into the consumer side of things, inflation fell between the Bank of Canada target range of 1 to 3% in June. However, since then have reversed course. Headline inflation in the country came in at 3.4% in December, with food prices still fairly high, over 5% nationally. Shelter prices are also contributing significantly to headline inflation at over 6%, driven mostly by rent prices, which are near 8%, and mortgage interest costs, which are nearly 30% up nationally. Energy prices, on the other hand, have eased after higher gasoline and electricity prices in September. In terms of the core metrics, core inflation which is excluding all items excluding food and energy, came in at 3.4% nationally. The Bank of Canada also takes into account certain other core measures like the median and the CHIM. They're all hovering around the 3.6% mark. So it's slowed down, but it's not really as slow as they would want it to be. 2023 inflation in Alberta came in at 3.3%. For the full year, nationally, it came at 3.9%. Our forecast is the fact that inflation is going to take its time to slow down. It's going to be around 2.9% in 2024 and ease more to 2.5% in 2025. And we'll probably get used to more normal, or the 2 to 2.5% inflation from 2025, beyond 2025. As a result, we know high inflation, especially interest rates, bite with a lag. And this is evident if you track consumer spending in the country. Having said that, Alberta's retail revenues are up 4.6% through November. Second highest retail revenues in the country after PEI. A couple of things going on there. Food and auto sales are driving majority of these gains. In terms of the auto sector, we've had a lot of supply chain issues plaguing the motor vehicle sales revenues in 2022. They are up in 2023 by 8% year to date. And another evidence of that is the number of new vehicles sold in the province and nationally is up over 10% year to date. On the food side, food and beverage store revenues were up about 9% relative to the first 11 months of 2022. It's driven by the fact that the sectors are recovering after consecutive declines experienced in 2022 and 2021. Another evidence of that is restaurant sales are strong, up 14% year to date, with people dining out more post the pandemic. Retail sales numbers are, of course, a good indicator, but however, it's a lagged indicator. So we've developed an in-house index called the ATB Consumer Spending Index, which tracks actual transactions by MasterCards by ATB customers. That index is showing that sales have picked up a little bit towards the end of this year. However, a flattening trend is pretty obvious or pretty clear in that index as well, as compared to the retail sales from Stats Canada. So real consumer spending is expected to rise about 1.2% this year, much below the expected rate of population growth that we are seeing. Now let's look at the labor market. It's been, again, just like oil prices, well, maybe not as much, but labor market numbers have also been volatile, going up and down, as you can see from the chart on the left. Employment in December was up 6,700 in Alberta, following a gain of 8,900 in November. In overall, if you see the full year, province added jobs in 10 out of 12 months. Alberta employment was up 3.6% versus 2.4% experienced nationally, second only to PEI at 5.6%. Across industries, jobs rose in 12 out of 16 subsectors, led by professional, scientific, technical services, transportation, warehousing, healthcare, manufacturing. These are all industries that were up over 10% in terms of job growth in 2023. Wages have also picked up after lagging the previous 2 years. Average hourly wages in the province are up 3.9% in 2023. Those are all encouraging signs. However, as we've seen, our unemployment rate has also started to go up. Now, one thing to note with the unemployment rate, it is, of course, unemployment rate going up is a sign of things slowing down, but it's also a result of more people coming into the market. So as more people come into the province to look for jobs, the unemployment rate goes up temporarily, and that's kind of what we are seeing with the high migration levels, which are putting upward pressure on the unemployment rate. The province's unemployment rate jumped to 6.3% in December, a bit higher than the national economy, but it's also because our population growth is much faster than the national economy. For the most part, enough jobs were created last year to keep pace with the influx of migrants, resulting surge in the labor force. Our labor force numbers grew 3.7%, just for context, last year. So we expect the rising number of people into the province to continue to put upward pressure on the unemployment rate, but it should start easing fairly soon. Having said that, there are still quite a few points of concern, especially with job vacancies. Alberta's job vacancy rate has fallen from its mid-2022 peak. It's still hovering above its pre-pandemic level. So finding the right person with the right skills and experience in the right place remains a challenge across sectors. And if you see the third quarter results of across sectors, accommodation and food services reported a job vacancy rate of 7.3%, which was lower than the 11.5% we had seen from the pandemic in 2021, but still much higher than the average across other industries. Another sector that is really struggling in terms of staffing shortages is the construction sector, where they're just not being able to keep up with the demand for housing, given the fact that skilled workers are needed. Job vacancy rate of 6.5% is what we had seen in the third quarter of 2023, which reflects about 14,000 job openings currently. Migration from other borders are expected to fill these gaps right now or in the future. But with the aging of the population continuing to drain experienced workers from the pool, finding qualified workers will remain a concern for years to come. Now let's look at one of the more encouraging stories we've had, especially since last year. July 1st, 2023, our population jumped 4.1% from the same time in 2022. For context, that's about 185,000 Albertans added in 1 year. It's the size of Red Deer and Airdrie put together in 1 year. That's what we gained, which is the highest population growth we have seen since 1981. It's also the highest in the country, where the population grew 3% in comparison. So we've broken a number of actually demographic records when it comes to population growth. But the reason our population growth was so much stronger than the rest of the country is because we gained a lot of people from other regions across Canada. We had a record net interprovincial migration of 56,200 people. So where are these people coming from? BC and Ontario seem to be the main sources. The two provinces accounted for more than 2/3 of Alberta's net interprovincial migrants in the third quarter, and more than 70% over the last 4 quarters. And that said, Alberta gained residents from every other province, with notable gains from Saskatchewan and Manitoba. Net international migration surpassed 112,000. Which is another record. However, it's important to note that majority of the international migration numbers are being caused due to a surge in net non-permanent residents, as NPRs, as they like to call it, which includes asylum seekers, students, and temporary workers. And this is a category we expect to normalize a little going ahead. In 2024, our population was expected to rise 2.5% in our forecast. However, given the current pace of over 4% that we are seeing across quarters, we are for sure going to push our forecast for population growth up for this year and the year in 2025. Now, population growth is expected to, as I said, moderate, but remain above the historical averages of under 2% in the medium term. The impact of that, as you can see, the chart on the left, unit sales have been ticking down everywhere in the country, but Alberta's housing market remains a little bit more resilient. Canada's resale market has been ebbing and flowing with interest rates. When the Bank of Canada started tightening in early 2022, home sales fell. When the bank paused, sales picked up again. But when rate hikes resumed in June, Alberta's sales continued to move ahead while the rest of Canada shifted into reverse. This divergence is largely due to faster population growth in the country, record migration levels, and which are causing additional demand for houses, and also the fact that our house prices remain relatively more affordable than other expensive markets like Toronto or Vancouver. Benchmark prices in Alberta rose for the 12th straight month in November, and the benchmark price averaged just under 500,000. But if you compare that with national numbers, they are on the declining end. Alberta prices are still well below the national average of over 700,000. It's largely driven by the fact that Toronto and Vancouver prices are over $1 million. So Alberta remains still fairly affordable. So with the rising population levels, we have more households in Alberta now due to the rising population, pushing demand for more housing. In the early part of the year, housing starts fell amid rising interest rates and higher costs and labor shortages. However, towards the second half of 2022, they have picked up quite a bit. To give you context, 29,000 units was what it averaged in the first half. In the second half, it averaged over 40,000. It's been, again, a cause of outlandish population growth. And as you can see, the chart on the right, estimated household formations in the province due to rising population is expected to push housing starts higher. However, if you see CMHC's estimates of a supply gap of housing across the country, they estimated Alberta's housing gap at about 130,000 units by 2030. So many homes still need to be built to keep up with this surge in households. We expect housing starts to be closer to 40,000 units in 2024 and normalize towards 35,000 units till 2027. Overall, we've weathered quite a few storms. We, of course, had the biggest decline compared to any other province in terms of GDP growth, as it fell close to 8% in 2020, recovering only partially in 2021 and making a more full recovery in 2022. In 2024, we are expected to grow about 2.1% in GDP, and that's largely, and I would like to mention that without the Dow project being greenlit, our growth would probably be at around 1.9%, but due to the project, we are kind of assuming a little bit of liftoff in GDP from this year onwards. In contrast, 2024, the Canadian economy is expected to slow to 0.7%. So our 2.1% is still pretty good compared to the national average. We have a slightly stronger increase in 2025 of 2.7% as consumer spending and exports, factors that are slowing in 2024 as they pick up more. However, we do scenarios, and in terms of a low growth scenario, our growth comes in at -2%, or -0.2% for 2024 and 2% in 2025. If I summarize, this is just a snapshot of just a couple of indicators. We are facing the same headwinds as everyone else with the uncertain economic conditions and tighter monetary policy measures. However, the natural resource sectors and agricultural sectors, along with the higher population growth and non-energy spending and the energy sector making a comeback, that's kind of pushing our growth higher relative to elsewhere in the country. The unemployment rate, as I mentioned, came in at 5.9% for 2023. And we are likely going to see a bump up in the unemployment rate in our next forecast for 2024, just given the fact that our latest readings in December and November were slightly high. Retail sales rose 4.2%, rather that's what we expect it to rise 4.2% in 2023. And that's expected to slow to 3.4% in 2024 before picking up towards the more normal average of 5 to 6% growth from 2025 onwards. Oil prices, as I mentioned, expected to hover under $80 a barrel for this year. before moderating more towards $75 in 2025. Inflation, our forecast is kind of in the same line as the national economy expectations, which are driven by the Bank of Canada. 2.9% inflation rate is what we are expecting for 2024, slowing more to 2.5% in 2025. And our employment levels were pretty robust, as you can see in 2023. They are expected to take a hit, maybe not as low as 1.6%. In our next forecast, we're probably going to bump that up a little bit, but it's still expected to remain around under 2% for 2024 before picking up in 2025, as is with the other indicators. We have the outlook that I just presented is available on the website, and I encourage you to look at that because it has a lot more detail in there. We also encourage the listeners to subscribe to the daily economic comment called The Owl, which is a free service which sends you daily economic analysis to your inbox, take into account pretty much anything that can affect the Alberta economy. So yeah, expect people to sign up for that one. I'm open to questions. Thank you.
That's a lot to cover. Okay, folks, if you like it's a lot to cover. And I wonder sometimes, I think one of the big questions for many of us, and I know for me, I've just been set my mortgage renewal. I'm one of the fortunate ones that I get to pick a 1-year or a 2-year renewal on mine. So it sounds like I might be picking one and negotiating if I can for my 1 year and then trying to do it again next year when the rates go down. So you're anticipating the rates, the Bank of Canada rate going down by how much?
So we are expecting the trend-setting rate to come down to 4% by the end of this year, and then 3% by next year, the end of next year.
Okay. Sounds good. We have a question. Can you please explain what housing formations are? Did you explain that?
I don't believe I did, but I can quickly do that. So total number of households with rising, essentially the cohorts, by age that are coming into this province. So if you take the change in the number of households relative to the previous year, that's the number of new households that are formed each year. Okay. So it's a group of people, like family, essentially.
And households are different than people who come in independently. So when we talk about a household, we're talking about a group of people in a house, not necessarily a household being, I think the CBC was explaining it last night or the other night as well. Household is different than total number of immigration or immigration into a province or into a region. Household is different than that. I know I have some people raising their hands, but if you want to go down to Q&A in the bottom, because there's so many of you, I can't see you all on the screen, you can type your questions into Q&A if you go down to the bottom of the screen. So I see that one of the big challenges for us is construction. Definitely. Do you have a forecast for, well, we're going to start, we've got some people asking questions. So let's start with construction. One of the issues, I was with a BDC presentation just before Christmas as well here in Calgary. And one of the issues that construction faces is that we're not training enough people in trades to make up the backlog. There's a lot of demand for trades and we just don't have enough of those. What is the forecast for residential construction? What are you looking at there?
It's a great question.
Starts, I guess.
Well, yeah, so that's one way of looking at it. So in terms of we see our forecast for housing starts, yeah. So residential construction spending usually can go hand in hand, or rather go with a lag with housing starts. The more demand, you spend more on residential. However, that's one sector that's really plagued by the challenges that we have seen, as we mentioned, in terms of staffing shortages and the training needed. So that's going to take a while, but I'm expecting residential construction. I've spoken with realtors and I've spoken with builders. So there seems to be a lot of work going on. And from what I can understand from realtors associations, they're not being able to even just keep up with existing demand because there's so much work to be done. Having said that, yes, the shortage of workers are a concern, but we should see increases in over dollar spending for this year, as we did last year as well, just with the fact that the demand is so strong and housing starts are picking up. So residential structure should go up. In terms of headwinds to watch for, we should probably be careful of supply chain disruptions, which can again cause commodity prices to go up, and as a result, materials to kind of construction material can also go up in terms of costing. So that can be a big concern.
So it's my understanding that we have a couple of areas of the world that are interrupting our supply chain. First, we have the Red Sea issue, which interrupts the supply chain. And now the other place in the world where we do push our goods through, the Panama Canal, is in a drought situation. So they're not putting as many ships through that as well. So they can't reroute them to the Red Sea.
Yeah, so
and they can't get them
supply
through the
chain
Panama,
disruptions.
so it's really squeezed.
Absolutely. Supply, as you mentioned, there's endless factors which can cause supply chain issues, and they're already doing that. But the good thing is that we actually have the demand, which is like, it's a good thing because at least we know when we get the construction material, when we get the people needed, we can get things started because people are willing to buy, clearly. So it's it's a challenging time. I can understand for construction sector.
So we have a few questions in terms of small business owners. So as a small business owner, what are the top 3 things we should be concerned with based on the very macro level information we just saw? So I'm a local small business owner. Say I'm in the restaurant industry, or I'm in construction, or I'm in healthcare. What are some of the things that I should be concerned with or looking at to help me sort of make some strategic decisions for my business?
Yeah, that's a good question. One obvious one, which I'm pretty sure everybody has been speaking about, is of course interest rates. And as I mentioned, so everybody is really waiting to see when rates start to come down, because that will affect their borrowing costs. And that's because I know disposable incomes have been strained, and right there is concerns of rising corporate and personal debt levels, not just here but across the globe. So that's one area to wait and see as to how quickly rates come down. And we are like, again, if national economic activity has started to really slow down, and as a result, we could see rates starting to cut sooner. However, it's also like one thing was a little concerning that the inflation reports have been slightly less encouraging of late. It's not really slowed as much as we would have liked things to be. So watching the inflation report is probably going to be important. But yeah, interest rates I would phrase as one of the top key things to look out for. We also should be see the demographic. Like we are getting, as I mentioned, a lot of people coming in from other provinces as well, international borders. So that's going to constantly push up the demand for pretty much everything in the province. And we've seen the impact on that, on housing, on retail, on labor markets. So that's going to be more of a push-pull factor. While interest rates are slowing things down, you will have the pickup due to population. So being a little watchful in terms of debt levels will probably be important.
Another one, the pandemic really drove the option for employees to work from home, which created the ability to work in a different location than your employer. Do you have any info on how this impacted the increase in migration to Alberta? So perhaps part of this question would be, I'm living in Toronto right now, and my little 200 square foot apartment is costing me $2,500 a month. But I work for a tech company and I can work remotely in Calgary and pay that kind of money and have 3 bedrooms and whatever. Are we seeing the net migration into Alberta change the job picture here? Or is that factored in when you're calculating that some people are moving here but not working here?
Yeah, that's a good way of looking at it. And I think it's in a way, like for certain sectors, like for example, where you don't need to physically be here to do your job, or and you can actually do it from elsewhere. We've seen a lot of people get hired on a hybrid or on a work from home plateau, and that's kind of pushed job growth up, I'm sure. But we don't have like job growth numbers that typically don't show the location as to where people are working from. But I'm guessing the fact that people are working, a lot of people are still working from home. I am. Is definitely playing a role or keeping the job growth steady despite but yeah, it does create other challenges, like because we know the office vacancy rates are still high and costs are high, so it does create those challenges. But in terms of job growth, I think that should still be a positive net impact.
Do you have any info on Alberta youth coming through the high school and college university systems? In particular, are they filling the gap in job vacancies, or are they leaving to go to other provinces and countries because of perceived lack of opportunity here?
Yeah, that's a great question. And it's one of those sectors where you don't really get much data, but you can make assumptions or inferences. So in terms of, if you see the vacancy rates or the job growth by sectors, you saw just when the migration levels started to pick up through last year, during the same time, certain industries picked up in terms of job growth. Like, for example, manufacturing is one, agriculture is another. These are sectors which definitely hire a lot of people who migrate here. So it's more, I'm guessing it's easily more, jobs are easily filled. So those sectors picked up more towards the end of last year when, at the same time, when population growth picked up. In terms of certain other sectors, however, if you see oil and gas sector, or where you typically have more institutional-based knowledge, you need more training. Those sectors are still lagging in terms of job growth, and vacancy rates are, as you can see, still fairly high. So those sectors take longer to fill in terms of jobs, and I'm guessing we don't get that data as to exactly how many people from which institutions. However, we've had a surge in student migrants, but that's also a function of the fact that in 2020 and 2021, those numbers were hit quite hard. So there's a lot of backlog that's clearing there. So yeah, this is something to keep in mind.
Will the slide deck be shared? I'll answer that no, but we will be posting this recording of this session onto our YouTube channel. And while I mention that, the Business Link YouTube channel, we also have the presentation we did last week from Statistics Canada. So Statistics Canada and the economists at bank and the economists and think tanks and everywhere else, all of that information sort of goes hand in hand. I'm sure you draw a lot of information from Statistics Canada. Would I be fair in saying Stats Can provides a lot of information for economists as well? Yeah, it does.
This is all Stats Can data. All we do is all Stats Can data, and that's what we project and analyze.
Yeah. So for those of you who are curious about how to get data and sort of, because what often happens, especially in our world of social media, information that you don't know whether it's fact or fiction or whatever else, can be very challenging to navigate through an environment where you feel one thing as a business owner and you hear another thing as a business owner, and then you see different things around you as a business owner, and you start to wonder what in all of this is truth, what all of this is fiction, where is it all from? So the sources that will have the actual data for you to sort of discern from our Statistics Canada. And last week we had a super presentation from Statistics Canada. You can watch it on the YouTube channel for Business Link and see all the new reporting that's coming out of Statistics Canada, and also how to use Stats Canada for your own business, how to find stats on Stats Canada, how to use it to find things, and how to navigate the site, because it can feel a little scary. We're having another presentation coming up in the next 2 weeks on how to do things like find your NAICS code for your industry and do your own very basic research into what Statistics Canada has to say about your particular industry, the financial ratios, the economic outlooks for it. Everything comes out of Statistics Canada. That's our tax-paying dollars at work, and they're doing the survey, they're doing the census, they're doing all of that all of the time. So that's the great place to get those resources. Is anything coming from this, or is it all talk? Well, that's always a good question. I think we can only predict as much as the events in the world are stable. We can't predict when a war necessarily is going to break out, when an area of the world where elections take place. For example, we just had some big elections in Asia. We had, I think, Taiwan had a big set of elections. Well, we get all of our whole microchip industry is sort of based there. Our graphics we're so global now that there isn't something that goes on in some part of the world that doesn't impact us here at home. So it can be, I'm sure, a challenge to sit in your business to look into the economy and say, well, this is a for sure thing. You're basically looking at it and saying, this is what we can see so far, and this is what we can extrapolate from it.
Absolutely. So that's why it's kind of important to analyze each economic event as its own, because to kind of, especially if the war in Ukraine is one perfect example. Like many can say, oh yeah, we weren't affected because in terms of human suffering and Most of the world that side, they felt that more than us, I would definitely say. But however, we faced supply disruptions. We faced commodity price spikes from there, which impacted us for over years now.
Exactly, exactly. And we get our goods, and we get many of our goods from other sides of the world. So if there's a backlog or a holdup, or things are stuck in shipping ports, or unexpected strikes, I mean, that just it's just a domino effect. So it can be a little challenging. From a more local micro level, though, you have shown us some things locally that we can see in certain sectors and certain industries and what's going on here in Alberta, which is nice. And even though we're affected globally, there are some things that we control locally on our local levels as well. One of them is local zoning bylaws. That's something to take up with your local municipality, Steve. If you want to change how that is done, one of the best ways to change your zoning bylaws and to change is to join the boards and committees that are always looking for volunteers at the city level. So you can actually join your committees that make those decisions in a volunteer role. You can apply to do that. Apply to become an elected official. Run for council, do some door stomping and groundbreaking, and be part of the change there. I think we often forget we're in a democracy. So if we want to change our if the best way to get involved democratically is to get into local politics and show up to the city hall and the council meetings and participate there. We've sort of lost that skill a little bit, I think, to do that. So it might be a great opportunity. I know that in the city of Calgary, where I'm based, there is always, and I'm in the inner city, so I'm just above the city at the top of the Crescent Heights Hill area. And everything up here is changing, and the types of homes that are being built, the regulations around it, what can be saved historically, what we're looking at to take what tree out and leave what tree in. That's all impacting, and how we solve our housing crisis. If you even look through the inner city of Calgary, you'll see that at some point in time, homes were built very quickly and very cheaply, even in 1919. So I live in a home built in 1919. You can see the great boom of 1919 in Calgary. Whole areas of the city had huge growth there. So you could see booms and busts in your local region as well, and see what they did to solve some of those crises as well. Aside from tech and chemical manufacturing, what other industries do you see emerging or growing quickly? So we have tech and chemical. Anything else, Sid?
Yeah, so we have actually quite a bit of a list on, as I mentioned, you should check out the outlook in detail because we have a list there in terms of growing sectors. I'll point out a few apart from those tech and petrochemicals. We, of course, have more food processing coming on. McCain is planning to double the size of its potato processing plant, which is about a $600 million investment in Coalsdale. Follows the 2019 Cavendish Farms. Similarly, we have in aviation, there's quite a bit happening. There's a project announced by de Havilland's planned aircraft production, which is expected to push about 1,500 jobs in the province by 2027. You have tourism. There's a lot happening in tourism. Tech, I've spoken about. Check more details on the website for ATB's economic outlook.
Okay, so anyone who wants a little deeper dive can sign up for the ATB Economic Outlook newsletter and visit the site as well. Also, BDC posts a lot of that information as well through their website. So the chief economist from BDC will have input into that as well. That's done. Does the government of Alberta encourage new tech startups? Is there a public-private partnership to support new aspiring tech professionals in this regard? Which sectors are more receptive? There is a whole startup community in both Edmonton and Calgary, and even in Red Deer, where if you become involved with Platform Calgary and Startup Edmonton, and I mean, all you have to do is speak to people in those areas, and they'll tell you what's going on with the government partnerships. You can also go to the Government of Canada website as well, and get a list of all the loan programs, tax incentive programs, everything that's offered across the country in partnership programs and everything else for your business. I'm going to hunt that down. Well, maybe Sid, if you want to add to that, and then I'll maybe put that in the chat box as well for folks.
I think Linda covered well, and that's like, again, there's enough information already out there, so I don't think I have anything more to add apart from the fact that it's actually happening. Like, if that's where you can see that Calgary being rated as the second highest tech talent growth force in terms of labor force across North America. That's something big, because there's a reason why that's happening. I would encourage you to look through those finer details in the websites.
So I'm going to put a few things into the chat. So if you go over into chat, and I'll just stick it in now. There we go. I'll get out of here. So to everyone who's interested in what is going on, I've put a link that we can more of your tax dollars at work. This is the Research and Business Intelligence website from Government of Canada. It gives you all kinds of data. And I'm going to see if I can just dive in and find for you. If we can find. So labor market data, statistics data, small business research, financial performance by sector. Let's see if we can. And then I'll try to get the one that talks about financing grants and funding from the Government of Canada. Let's see if we can find that. So if you're looking to find out what grants and funding are available from the Government of Canada, I'll stick that in for everyone into the chat box. And then if you're looking to find out what might be available to you, you have to self-identify. So you have to know your NAICS code, you have to know what kind of business you're in and how much money you're looking for, and then it'll pull up some information for you as well. So anyone have any more questions? I'm going to see if we can grab any more before I let you go. So thank you for being here today. Let's see. Oh, I'm going to check our Q&A one more time. Looks like we've got most of it done. And everyone, if you look in the next 2 business days into the BusinessLink YouTube channel, so you can go to the BusinessLink website and then head on over to resources and webinars and recordings and access the BusinessLink YouTube channel. We'll be posting this along with all of the other presentations that come for you as well. And thank you, Sid, for being here today. Nishanya, our lovely back-end support person, if you want to stop the recording and do that, that's great. I'm going to hang in a few minutes after we stop the recording and Sid leaves, and I'm going to just throw a few links into chat for everyone if you want to hang around and grab a few more links from the chat box. I'll stay on an extra 2 or 3 minutes and pour a few links in, including the YouTube channel, how to find a few other resources and information as well. Thank you very much. Have a wonderful rest of your afternoon, Sid. I really appreciate you coming on today.